Joining us on the show right now, we have with us Arvind Subramanian, the MD and CEO Designate at Mahindra Life Space Developers, joining in on the show right now. Arvind, hi, good morning. Good to have you on the show and hope you and all your colleagues and family members are safe as well. You've recently joined Mahindra Life Space, Arvind. Help us understand as to how is it that you and the company are planning to tide over the uncertainty that COVID has thrown for all of us.
Good morning. It's wonderful to be on your show on a day when Mumbai seems to be taking its first tentative steps towards opening up. Look, there's this old blessing, may you live in interesting times, and I don't think any of us could have anticipated that we would be living in these times. Sitting today, even 2 months plus into the lockdown, we're still faced with more uncertainties than certainties. So it's very hard to get and foolish to get ahead of ourselves. So what we've been focusing on is short cycle planning and execution, not thinking too far ahead, and making sure we are also keeping an eye out for the opportunities that will certainly arise coming out of the situation.
Since you're part of the industry, just wanted your overview on, this whole culture of work from home and whether or not we're going to see a tactical shift towards people moving away from, commercial real estate, and thereby do you think the prospects of commercial real estate are actually bleak in the future?
Look, I do think there is going to be some correction in demand for commercial real estate. Most large companies are looking at how they can further densify their office space coming out of the experience of the lockdown and work from home. I think it's, we shouldn't paint either extreme that suddenly everything will swing to work from home or everything will be work from office. There is a value of having your employees in office. There are certain roles that require employees to be in office. But there will be a lot more hot desking, co-working, densification, and therefore the demand for square feet of office space, I do see a correction going forward.
Subramaniam, hi there, good morning. I just wanted to understand the sales trend as well over the last 5 years, because there have been lots of disruptions. We've seen demonetisation, Rera, GST, and now we're dealing with the COVID pandemic as well. So while of course everyone's only second guessing at a time like this, when is it that you think things will start to normalize, come gradually back on track, and we could see sales seeing some semblance of normalcy?
Look, I think that's a great question. A lot of what you call disruptions, things like Rera, demonetization, GST, I see them less as disruptions and more as forces to organize an industry that had taken some time to catch up in terms of maturing and being more organized. So I think those have all been net positive for the industry. COVID, of course, is in a very different league, and it is certainly a disruption. If you look at the last few years, sales trends have been horizontal. There is no questioning that. And there's a very marked trend towards end users. So this is not seen as a substitute for a financial investment, which it was maybe 10 years back, where many investors would invest in a home simply to flip it as soon as the apartment was delivered. I think that behavior has stopped. And the market has shifted to end users, a younger demographic, and smaller ticket size apartments would be the big three highlights in terms of the sales trends. Now, looking ahead, coming out of this pandemic, I actually have a contrarian view to what many analysts and prophets of doom have been saying. I believe coming out of this lockdown, there's going to be a resurgence of demand, particularly from first home buyers. Because look, when you look at this lockdown experience, the entire family has been confined to their home for 24/7, almost 9 or 10 weeks at a stretch. And that is going to throw up the compromises that they've been living with. So many buyers who've been kind of considering buying a home but have not taken that forceful move, have not precipitated the decision. I think the lockdown experience will tip the scales in favor of them committing to buy a home.
Right. Mr. Subramanian, just last week, some very controversial, if you will, statements made by Minister Piyush Goyal. And he did state quite clearly that builders who are sitting on inventory need to cut prices and exhaust their inventory and repay developers because the situation isn't changing. How would you respond to this?
That certainly set the cat among the pigeons, didn't it? Look, you can't quarrel with that advice. There are many developers who've leveraged themselves quite heavily and have run ahead of themselves in terms of having a lot of unsold stock. So for those developers, there's no question that they will have to prioritize liquidity over profitability, and that's, I think, the message that Mr. Goyal gave us. That being said, there are practical challenges in terms of a sharp cut in prices. There are tax issues. You cannot sell significantly below ready reckoner rates. So one will have to think through some of those implications. And I see, this distress selling being very asset specific. I don't see it as a broader market correction.
Okay, fair enough. Now, what about your resizing strategy? Is there going to be some alteration to that now post-COVID? Will there be a lower ticket size, maybe higher room focus? How do you see the buyer trends now altering post this lockdown?
I've heard that narrative, and honestly, it's a bit of a glib narrative because, firstly, one must realize that homes are designed for multiple years. It's a 20, 30-year consumption product. So one can't be too whimsical and go with just, topical trends in a particular month or a particular quarter. Second, I could just as convincingly argue that customers will want to trade up and will value more space because they've realized that their current home doesn't have the kind of space they would need coming out of this lockdown experience. So, I don't think one should take a simplistic view of saying reduce the size of homes so that the ticket size reduces and quote unquote the affordability improves. Because I see customers will become much more discerning and they will decide whether they want space or location. They may trade off between that. Customers may decide to defer their purchase by another 6 months or a year so that they can save up a little bit more and stretch their budget to buy that little bit of extra space. So one will have to analyze this at every micro market and every project.
Okay, fair enough. Given the scenario for the sector, the fact that we are seeing, perhaps salary cuts or layoffs taking place, is it safe to assume that there will be an impact on pricing, that real estate players as well who are facing liquidity issues will alter the pricing trends which have been on the higher side?
Look, as I said, there will certainly be some asset-specific discounts that will be offered, but I see a lot more of the trend being towards payment plans being altered to accommodate the income profile of customers rather than necessarily price correction. Because these are both very important levers. Affordability has been actually by three things: the price, payment plan, and the home loan rates. We know home loan rates have come down significantly. If the payment plan can be adjusted, it can give a lot more elbow room to customers to buy.